Will you indulge me the next few minutes? I'd like to show you something and at the same time pose some questions to you. Namely, how do you value a stock or a market? How do you value it? Do you use PE ratios, PEG ratios, the dividend, the market capitalization? Do you look at the prospects of a company, the management of a company, new products of a company? All of the metrics that Wall Street teaches, right? Do you use any of that? Do you look at the unemployment report? How about the yield curve? The yield curve? How about the banks are making money, everybody's making money, therefore the interest rate, there's no other place, Tina. Take this ride with me. Let's pretend. Let's pretend you put $100,000 in this stock a few years ago, and you put it in right here. Right here. You are that unfortunate. You put $100,000 in at roughly $12 a share. Would you have suffered this drawdown? Because if you had, your $100,000 would be worth about 10,000, $5,000 or $10,000. As it come back up, would you have had the patience? Because see, this was way back. This is in February of 2019, just February of 2019. That is 2 years ago. You would have lost huge percentage of your money. Would you have held it? Would you have dumped it up here? How about we slide across? Let's just take this little ride with me. It's only going to be a few minutes. What would you have done? How about over here? Aha! You got a chance. You stayed with it and you got a chance to break even. Would you taken out your 100 grand? If you had held it, now it's like really moving. Here, you're up 100,000. Would you have held it? You're up 300,000. Right here, you're up $300,000. Would you have taken your money? Let's go for the ride. You're now up at this stage close to $500,000. Would you have taken your money? Looks like somebody did, right? But whoa, wait a minute. Are you telling me, Bagger? Check this out. We're not done yet. This is the ride back down. But look at the ride up. Are you kidding me, Bagger? Would you have been glued to a stochastic? Here, we're $130. You put $100,000 in at 12. You're probably up, close, tenfold. We're not done yet. No, we're not done. Then it branches off at 140. Would you have taken your money then? Oops. Let's just keep going. And we're going to keep going. If I can get my mouse on it. Okay. Here we go. I better grab it up here. We're now up to $200 a share. Would you have taken your money? What if you didn't get in? Would you have gotten in? We're now up almost $300. No, $250 even. We're still not there. Keep going. Why did this stock go up? Was it the PE ratio? Was it the PEG ratio? Was it the dividend? Was it the jobs? What was it? Was it new management? Was it new products? We're still going. Tops out at about 350, $400 or $500. You know what this is. This is Game Stunk. Game Stunk. Is the irony of it all is not lost on me. I hope it's not lost on you. Game Stunk. I don't care if it's Game Stunk. I don't care if it's Amazon. I don't care if it's Apple. I don't care if it's the Russell 2000. I don't care if it's Bitcoin. I don't care if it's, I don't care what it is. If anyone is trying to make a valuation judgment of anything in a public market where people are offering things for sale, the only justification, in my view, the only metric that is important is when you offer someone to buy something that there is liquidity and there is a buyer there. Somebody bought Game Stunk after 2 years up here at $350 a share. Maybe they put $100,000 into it. Maybe they did. Somebody probably did. Somebody probably did more than that. It is here. The valuation metrics that you have been presented by Wall Street, by your economics classes and your professors who couldn't trade their ass out of a paper bag are meaningless. And yes, we're in a bull phase of the market, and there is no other place. But I want you to remember something. Please remember this. There will come a time when things are being sold and nobody wants to buy them. And prices will do what? They will drop. And they will drop again. And they will drop again. And they will drop again. And if you have not figured out by now that the value of any stock, futures contract, option contract, commodity, forex, whatever it is only worth what someone is willing to pay for it at that time. If you haven't learned that lesson, the ride back will be brutal. I could put up any kind of a chart and find one that is currently up here. Look no further than the Russell 2000. And it could be at this stage. It could be at this stage, or it could be that stage. We work very, very hard to determine on an intraday basis where the breakpoints are, where the buying starts or where the selling starts, and where the momentum is. It's always been about this, going back to the 1920s, going back before that, back to the buttonwood tree. The valuation metrics are put together by the Madison Avenue, by the stock pimps, by the people who are selling this crap. And this is crap, but there's a lot of crap out there. So just a little public service announcement. It isn't going to be any different on the way down. You want to close your ears, maybe even close your eyes. Have a gut check. Think about it. If they can do this with GameStop, can they do this with Tesla? Absolutely. Can they do this with Amazon? Absolutely. Did they do this with America Online? Yes, they did. And they took it out. Could they do this with JDSU, Uniphase? Yes, they did. And they took it out. Zero. Zero. These stocks went to zero. Lucent Technologies, WorldCom. How will you know? If you buy based on a narrative, I don't care what the narrative is. I don't even care if the narrative is we're all going to pile in and defeat some hedge fund. That was a narrative. How did that turn out? Yes, there were some winners. My guess is the winners were the people who could read charts and read the technical pricing, but also had the discipline and the experience and the tools to execute. Now, did we participate in GameStunk? No, we did not. Have we done it in the past? Yes, we have. Tilray, another one. In fact, let me show you Tilray while we're here. This was Tilray. At 25, he's probably saying, well, that isn't much of anything. Well, let's go back. Let me change this to a monthly chart so you can see the perspective, because this was some time ago. Let's go back a little bit further and I'll show you what I mean. The story at that time, let's put it on a weekly so we can see it. The story was marijuana was going to be legal, and Tilray and everyone invested in Tilray was going to make a fortune. Oops. Here was the ride on Tilray. $24. Straight up. This is probably split adjusted. In fact, I think it actually even went a little higher. So let's reset this. Run over a little bit. Let's could it have gone? Because I seem to remember that being up at 300. That may be split adjusted. I think it went intraday. So this is on a closing basis. It actually went twice as high. This is on a closing basis. Here is Tilray here. Is Tilray going to go back up here? Maybe it is. Maybe it's going to do it over the next 4 weeks. I don't know. I don't know. Nobody knows. But I can tell you one thing that it doesn't have anything to do with. It doesn't have anything to do with PE ratios, PEG ratios, the dividend, the market cap, the management, the products, none of it. It only has to do with whether or not people want to speculate and want to buy. The people here want to buy these people out. I'm bagging on at stockmarketcaddy.com. Feel free to check us out. Feel free to give me a call. We love what we do. I can't say that I love every aspect of the market. We do think of it as a game. We always have, but we're very serious about what we do. We are truly running a business. We're trading our own money day in and day out. So if you're interested in our perspective and our approach, we trade mechanically. 813-758-8263. Thanks.